OKLO stock has been one of the hottest names in the market, with massive swings, a jaw-dropping rally of nearly 500% this year, and now everyone's asking the same question. Is it time to buy, hold, or sell OKLO? In this video, we're going to break down the numbers, the trends, the risks, and the opportunities you need to know. So stick around because this could impact your next investment decision. Before we dive in, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss our latest updates. And hey, drop a comment below with your own price target for OKLO. We'd love to hear your thoughts. OKLO has been on fire recently. Since September 9th, our system flagged the stock as a hold accumulate, and even with that cautious outlook, OKLO has gained over 92% in just a short span of time. That means an average return of more than 8% per day since the call. But here's the key takeaway. A score of 0 in our system doesn't mean safe growth. It actually signals heavy volatility and higher risk. That's something traders need to keep in mind. From a technical standpoint, OKLO just broke through a strong upward trend. Support is now sitting at $108.66, and that level could offer investors a second chance to get in if the stock pulls back. In the short term, our models are projecting a possible change of about 72% over the next 3 months. That could mean gains, or it could mean sharp drops, depending on how the next catalysts play out. Looking further out, a 12-month forecast points to a potential 257% move. If that plays out, OKLO's price could land anywhere between $189 and $351 a share. That's a wide range, but it shows just how unpredictable this stock could be. On Wednesday, September 24th, OKLO stock gained 1.67%, closing at $142.65. It's now up for 4 straight days and has risen in 8 of the last 10 sessions. That's impressive momentum, but here's a red flag. Volume actually dropped by 6 million shares on that day, which can sometimes hint at weakness behind the rally. Over the past 52 weeks, the stock has traded between just $7.90 and $143.75, which is also its all-time high. Right now, it's sitting less than 1% below that record. And there's big news on the fundamentals. OKLO has officially broken ground on its first Aurora microreactor, shifting from design to actual construction. For investors, that's a huge psychological boost. It means the company is moving beyond theory and into execution. But remember, OKLO still doesn't expect revenue until at least 2027. That's a long wait, and valuation concerns are real. Analyst ratings are mixed. Some firms like Wedbush and William Blair have an outperform rating, while others like Seaport Global and BTIG are neutral. Overall, though, the stock is leaning toward a sell recommendation, especially when you look at valuation metrics like price to earnings and price to book. So we're getting conflicting signals, positive momentum and bullish long-term energy potential, but also serious short-term risks and downgrades. Technically, OKLO is showing buy signals from both its short-term and long-term moving averages. In fact, since mid-August, the stock has rallied more than 118% off a pivot bottom. But again, traders should watch out for divergence, because price has been rising while volume has been falling. That's often a warning sign. This is a high volatility stock. On average, it's moving more than 14% per day recently. The RSI, or Relative Strength Index, is sitting at 96, meaning the stock is heavily overbought. Our stop-loss recommendation right now would be around $138.97, which is just a couple percent below current prices. Add in the fact that insider selling has been outpacing insider buying, and it's clear that risk levels here are elevated. Looking ahead, all eyes are on OKLO's Q3 earnings report coming up on November 13th. Analysts are expecting a negative EPS of 13 cents. If the company beats expectations, it could fuel more bullish momentum, but a miss could trigger a sharp correction. So, is OKLO a buy right now? Based on the data, the stock has momentum, technical buy signals, and a powerful long-term growth story. But on the flip side, it's extremely volatile, heavily overbought, and facing major valuation concerns. For now, this stock looks like more of a hold accumulate candidate rather than a strong buy. If you're already in, locking in some profits might not be a bad idea. If you're waiting on the sidelines, patience could pay off with a better entry price after a pullback. What do you think? Is OKLO worth the risk, or are you staying away? Let us know in the comments, and don't forget to like this video, subscribe, and turn on notifications for more stock updates. This video is for informational purposes only. It is not financial advice. Investing in stocks carries risks, including the risk of losing your capital. Always do your own research and consult with a licensed financial advisor before making investment decisions.